In less than 10 minutes, I'm going to show you the power of 5 crucial bank accounts your business needs to thrive. Stick around to the very end to understand why these are essential and how they can save you from financial headaches, protect your profits, and fuel your business growth. So before we go further into each account, you might be wondering, why do I need multiple bank accounts? Isn't one enough? That's a great question. Well, here's the thing. Having multiple bank accounts for your business isn't about making things complicated. It's actually about being more thoughtful on how you organize your finances. Each account has a specific purpose. When you keep them separate, it gives you better control over cash flow, easier expense tracking, and helps you make more informed financial decisions. It's like having different drawers for different types of clothing. You wouldn't want to throw your socks, shirts, and pants in the same drawer, right? The same principle applies for your business finances. Of course, it's not to say that you can't do it with just one drawer, but if you have the option to open multiple bank accounts at no cost, it's a no-brainer to keep buckets separate for your business accounts. By compartmentalizing your money, you can easily see where it's all allocated, whether it be operating costs, reserves, taxes, or growth. This setups help you plan more effectively, preventing overspending in one area while making sure that you have enough set aside for others. Now let's go over the different type of bank accounts that your business needs. So first up is an operational account, which is the workhorse of your business finances. This is the account that your business primarily runs on and typically the first one that everyone starts with. Once your business starts growing and making some decent money, that's when you would want to branch out to different accounts. So whether you have a sole prop or a single member LLC, this account will see the most transactions. So what does an operational account actually do? Well, as the name suggests, it handles your day-to-day business operations. This is where all of the income lands first from all of your payment processors. So if you get paid by wire, ACH transfers, Stripe, PayPal, or whoever you get your income from, this is the account that all the money goes into first. This is also where your expenses come out of. For example, this can be rent, materials, supplies, subscriptions, basically everything that you need on a recurring basis. Now, I wouldn't recommend paying directly from your operational account if you had the option to. Instead, I suggest using a business credit card. That way, you can enjoy the benefits that come with it and then pay off those expenses with the operational account. Another crucial aspect for your business is a profit account. This account embodies the principles of the profit first approach, a concept that I personally love from the book Profit First. If you haven't read it, I highly recommend taking a look at it or checking out the summary. But unlike the traditional method where we subtract expenses from our sales to find profit, like sales minus expenses equal profit, in the book, it proposes a counterintuitive formula: sales minus profit equals expenses. So in simple terms, you take your profits first, then you run your business with what's left. So how does a profit account fit into all of this? It's straightforward. Every time you receive income into your operational account, you immediately transfer a predetermined percentage into your profit account. This can be whatever percentage that you decide it should be. Whether you are a sole prop or an S Corp that pays yourself a salary, be realistic about this number. If you gross 100K a year and you want to pay yourself 50K, then do that. The remaining 50K should be used to grow the business. This account acts as a holding area for profit. It's like your business owned saving account, ensuring that you always take profits first and not what's left over. With each deposit, you're steadily building your profits without getting them mixed up with your daily operations or other expenses. But remember, this is not for tax, not for a rainy day, but pure profit. This money is a direct reflection of your business success and serves as a reward for your entrepreneurship. Having a profit account helps you prioritize profit, accumulate wealth over time, and provides a clear snapshot of your business profitability. Now, to open up these 5 accounts, I would like to keep a mix of credit unions, big banks, and some online financial companies like Novo, which is today's video sponsor. They actually offer free business accounts, which is a great way to lower your costs. What I really like about Novo is that it's simple and it's transparent. There's no hidden fees, no minimum balance requirements, just straightforward banking that supports any business. Their customer service team is also great and they're always ready to help. So if you are looking for an effortless way to manage your business finances, I highly recommend checking out Novo Business Checking. The link is in the description below. Now let's move on to our third account, which is our cash reserves account. This will be your financial safety net to buffer against those unexpected events that may come up in the business world. So imagine this as an emergency fund that you would have for like your personal expenses. That's the same message. This is your account's business emergency fund. It's there to provide you with the peace of mind knowing that you have a cash cushion to fall back on when unexpected expenses arise or if your income streams experience a little bit of a hiccup. I typically recommend having 3 to 6 months of operating expenses saved up into this account. However, the exact amount truly depends on your specific business and the industry that you operate in. Some businesses might need a larger safety net due to inherent uncertainties of volatility, while others can operate comfortably with a smaller reserve. The key here is to understand your business needs and to create a plan that is tailored specifically to you. Remember, the goal is to make sure that your business can weather any financial storm that it may encounter, and having a robust cash reserves account is a crucial part of that strategy. To build this cash reserve, with every income that flows into your operational account, you want to allocate a certain percentage into the cash reserves account until you build your target reserves. So in times of need, this account can be the difference between weathering a storm and sinking. Now, the next account on our list will be the tax reserves account. Taxes are just part of running a business. No one likes them, but we all have to deal with them. And the last thing you want to do is be caught off guard when tax season comes around. This is where your tax reserve account comes into play. This account is specifically designed to put aside money for your tax obligations. Each time revenue comes into your operational account, you should set aside a specific percentage for taxes and move it directly into your tax reserves account. I personally like to put 20% because as business owners, we have the ability to write off a lot of our expenses. This practice not only makes it easier to manage your tax obligations, but it also ensures that you never get caught off guard by an unexpected tax bill, meaning that you will always have the funds ready when it comes time to pay your taxes. And here's a bonus tip. If you find yourself overestimating your tax bill and you have a surplus money in your tax reserve account after paying your taxes, you can just treat this as a regular tax return. This extra cash can be used to replenish other accounts, invest back into your business, or even reward yourself for planning so well. By proactively managing your tax obligations with a dedicated tax reserve account, you can alleviate stress and focus more of your energy on what you do best, which is growing your business. Our final account is what I like to refer as your war chest, or more formally, the growth account. This is the account where you set aside your funds for business future growth, expansion, and unexpected opportunities. Think of this account as a strategic reserve, one that allows you to seize opportunities as they arise, whether it is expanding your product line, hiring more staff, or investing in new technologies, or even acquiring another business. This account gives you the financial flexibility to make big moves when you're ready, without straining your operational funds. However, just like a war chest in medieval times, you don't use these funds for just any occasion. These are set aside for significant investments or opportunities that have the potential to propel your business forward. The amount that you deposit into your growth account can be a fixed percentage of your profits, or you can make deposits as and when you see your business has a surplus in funds. It is a flexible account, but remember the primary goal is to use it for strategic growth initiatives. Building this war chest takes time, but it is worth it. It will give you the financial power to make game-changing decisions, helping your business scale and succeed in the long run. So today we broke down the power of using multiple bank accounts in your business: operational, profit, cash reserves, tax reserves, and a growth account. Adjust these accounts that suit your needs. Again, if you are in need of adding another business account, go check out Novo. It's free. If you want to hang out with me some more and learn about business finances, check out these videos over here.